Orlando's real estate market has really been full of movement this year. Let's look at how 2025 shaped up, where we stand now, and how Central Florida and some key areas within Orlando compare to the national picture. We'll start with the top of the market. The Winter Park luxury market, the $2 million and above homes here, have been doing fairly well. Home sales in this price range are holding steady with slightly more than last year. Time on market remains healthy, which is around 65 days. This shows strong demand for the luxury tier. Zooming out, here's a look at the median sale prices across the U.S. and how Central Florida compares. Here's a look at where some key areas of Orlando sit compared to the U.S. You've got Central Florida and the city of Orlando, both on par and just slightly above the U.S. median sale price. The Winter Park 32789 zip code sits at about 1.3 million. Windermere is just under 1 million. College Park is around 650,000. If we reference this chart for the U.S. single-family median sale prices, then we see it drop from June all the way until about January. Then we see it tick back up. This is normal. It's part of the seasonality in real estate. So I really like to look at price per square foot. This takes into account what people are actually paying for space. So let's look at how Orlando shapes up compared to the U.S. There's some interesting trends that we're seeing. Looking here, we see that the U.S. median sale price per square foot is at about $220. City of Orlando and Central Florida is slightly above that, which is closer to around $250 a square foot. Winter Park is the most expensive part of Central Florida. That's hovering at around $450 a foot right now, although sometimes it's a little bit higher. Windermere is at about $390, and so is College Park. And here is an example of how that's changed year over year. Again, this takes into account the seasonality of real estate. So we could see that it's slightly up for the U.S. as a whole, Central Florida and the city of Orlando. It's a little higher in Windermere and in College Park. And it's actually down closer to 10% in Winter Park. But again, this is a smaller area, so bigger sales or a handful of smaller sales can really skew the data one way or another. We want to look at sales volume as well, or how many homes are selling. If we look at 2025, we already went over Winter Park Luxury, which sold more homes in that luxury range compared to 2024. If we look at Winter Park as a whole, the number of total sales is about on par with 2024. While in Central Florida and City of Orlando, it looks like there are going to be a bit fewer homes sold this year compared to last year. And then the City of Windermere and then there are pockets like College Park that have actually sold more this year than last year. And if we look at the vacation homes, that's another story. If we use the data for how many homes are selling, we can also look at how many homes are listing, and that gives us the story of inventory. If we look at months of inventory for the entire U.S., we see that inventory has been dipping since about June. However, that's seasonal, and that's okay, but we are up about 18% from this time last year. There's still only about 4 months of inventory. If we compare that to what's happening around Central Florida, some areas are comparable, like the city of Orlando and Central Florida. Winter Park also has right about 4 months of inventory. However, the vacation market is a different story. There's over 9.5 months of inventory just for single family homes. If you're unfamiliar with the vacation market of Orlando, it's the area in the southwest region of Central Florida. This area is zoned for short-term rentals, and there's just quite a lot of development that's happened over the last few years. And with interest rates being a little bit higher, the rental rates going down a little bit, created a market where there was just too many homes or too much supply based on the demand, and it's caused things to really slow down. Homes take a bit longer to sell there. We can really see how the number of sales in the vacation homes have been declining for the last few years. So I know I've yet to mention the suburbs or isolate the data of the suburbs of Central Florida. That's because it's very difficult to track this data. So much of it is brand new construction, and much of it actually doesn't go through the MLS, so there's really no place to track it unless you're working directly with whichever particular builder. One thing we do notice is how incentives have changed over time. What I mean by incentives is that builders usually offer a certain amount to buyers to either buy down their interest rate, go toward their closing costs, or maybe pay for upgrades. When there's a ton of demand and a low supply, builders usually offer very little in incentives. And when there's a lot of supply and very little demand, then it's more of a buyer's market. Builders offer quite a bit of incentives. And right now, in the last year or two, incentives have been very nice. Just in the last year, some of our buyers have gotten close to $70,000 in incentives, which completely paid all of their closing costs, bought down their interest rate, and paid for some upgrades. So I know that's not a specific statistic that you could use to say, hey, this is exactly how the new construction area is doing, but know that it's very much a buyer's market in many of these new construction developments on the outskirts or perimeters of Central Florida. In my next video, I'll share what many of us are expecting